10-day realized volatility is 13, 20-day realized volatility is 14. So that means we've got a over 6-point spread between realized and implied. It was a little bit wider at the beginning of the week, but you know, we have a lot of demand for risk premium, and we're not seeing a lot of volatility in the market, believe it or not. When you're at a 20 VIX, you need movement of about 1.25% every single day to justify having a VIX of 20. So what the VIX is telling us is that either options are really underpriced or overpriced, excuse me, or we've got a big move coming. I would kind of venture toward the latter. I had the opportunity to go to the Chicago Board Options Exchange Risk Management Conference last week, and there were a lot of really interesting notes. But the big one that I caught was that equity markets are really, really well hedged, but the credit market, so the bond market as a whole, is not hedged.
Yo, what's up, everybody? What up? What up? What up?
High risk premium.
Man, I'm hungry. I need to get some breakfast.
Starting to get a little scared. And the bond market is really the dog, and this market is the tail. So you gotta watch the 10-year Treasury. Otherwise, you're kind of missing out on what is really driving the market. And the 10-year, and then I'll wrap up here. I know you guys don't want me too long. The 10-year is down a little bit today. I don't think that bodes very well for the market.
Yeah, that seems to be one of the common themes that we've been seeing. And I personally am still leaning to that downside. Do you have, I guess, positions open going into the market today, Mark?
In the S&P, yeah, I've got I've got a relatively large bearish position on the downside, and then I've hedged it with and this is a portfolio margin type of trade, but I've got what's called a time vertical, so I'm long near dated calls, and I'm short further out of the money calls against it. So for instance, I'm long the November 4250 calls. I'm short the December 43 and a quarter calls. I did that for about a $6 credit. That's my hedge against kind of my big downside plays that I have.
Perfect. Great to have you on, Mark. Excited to hear some thoughts during the market.
Excited to be here.
Yeah, absolutely. Hey, by the way, if you're in here, we already have 600 plus people in here, but if you're on this panel or if you're in the audience, a share of this space goes a long way. I retweeted it out. Shout out to everyone else that has done the same. Goes a long way. Appreciate you being here and doing so. All right, exclusive, my man. Walk us through the game plan for today. What's on the watch list?
What up, everybody? What up? What up? What up? Smash that like button. It's great to go.
Yeah, you know, it's
What's the Twitter feed or guess the X feed? Oh, it's on my
last two speakers have said.
it's on my feed
It's just
on Twitter.
market to day trade right now.
All right, everybody, quickie, starting us off. All right, core PC today I think was the mover. Came out kind of flat. Commander traders showing bull alongside selling on the asset manager has been liquidating since about late September. This is post Fitch downgrade. Hedge funds are sitting flat, nice and flat, so there's really not a lot of short covering to buffer any of the selling. On top of that, monthly map is still looking extremely garbage for the downside. Market's been shattered since the Fitch downgrade. We've lost that bull momentum, and we've just kind of been seeing a low volatile kind of sell off in a greater bull market down to here. After monthly earnings, Ash and I and Adam came up and we were screaming at everybody. Monday morning we said, this is bad, this is bad, this is very, very bad. It sounds like a nursery rhyme right there. But what we are staring at is on your monthly map cheat sheet. It was seeing increased volatility for the first time in a long time. The spreading out, the pulling apart of bull and bear zones is increasing volatility. The market's going to have velocity. These two green candles on Monday, my tweet literally was, I'm calling BS on this rally now. Those two green days immediately hit waves of selling. This is the first time we've seen bull liquidation. First time we've seen bull liquidation. And since the market rallied. So now we're finally seeing bulls stepping out of their positions leading into these earnings this season. Not good. The bottom of the bull side sloping up. Your cheat sheets, which are available in the Discord, will show you how to read monthly map. So you're going to see the bull side liquidating and the bear side relatively flat. So there's not a lot of short covering to buffer that selling, which is going to lead to increased volatility growth. And it's just weird because options, like we're talking about this in spaces right now, options are like the implieds are there, right? It's like we're still trading right now like we're in a low volatility environment. It's weird. And it feels like even though VIX is in 20 or like less than 20, it feels like it's 25 the way it's trading. And so something's brewing, and something is brewing that's not good. This could be, and I hate to say the C word, but this can stimulate a flashy crashy sort of thing. You have to be very careful. And I don't think that the market's going to collapse on itself for a long period of time. But what I do think is possible is I think that we can have a liquidation event that kicks us lower, and we can hit that low, that 38, 39. And I haven't said that in a long time. And then we bounce out in V. Once that volatility collapses, remember, the bears have been waiting patiently for a sell-off. Economic data is great that I don't think the stock market's going to keep falling, but I think that it's very possible that we do get a liquidation event that can happen. Be very careful going forward. This is rapid, and this is until November 6th, okay? So be very careful until November 6th. Now we have Amazon earnings yesterday, which kind of gave us a little bit of bump in the market. These are yesterday's dynamic hedge pressures. We're still closing or trading inside of that range, holding above monthly. But we already know, right? We already know what we're staring at, right? Any upside to me, you know, I have limitations already there. We're gonna watch resilience, CD, all the normal stuff we do at the beginning of the day when we come out in about 8 minutes. So.
Sorry about the little bit of late start. Can't really control the fact that it's rainy and miserable in New York, and it's hard to say spin out and actually get weak to Detroit. But I'm here now, so good morning, everyone. Hope you're having a great morning. As Gav said already, if you haven't already, please drop a follow to all the speakers up here. We've got a great panel, a lot of really great information to get out to you guys today to make sure your trading is as excellent as it could possibly be.
I'll be right back. I'm gonna go make something to eat. All right, I'm back. Oh, I shouldn't have left this line on here like I think it's gonna go there. Let me start over. That's the highest of the day. I think high of day, DD band, so there's not much upside. I think I'm gonna just play the range here. I got some pasta, I was hungry.
So if you divergences and notice to see that those will again next week. We expect to probably see tech and others start catching a bit behind that into November and December, which is seasonally the last 2 months as well as
We'll see if Amazon has enough to give us the lift for the day. If I were to take a guess, I think that the market's gonna try to fight its way higher if it does go higher. It's not gonna be like a straight run rally or big green day. If it is green, it's gonna be green and choppy. So it's gonna be big waves up, big waves down. I think volatility's back on play. Good morning.
Remember, if you go back on the weekly, there's a lot of volatility. These intraday moves, if you just start plotting, we'll probably just again we can sit here for a couple of weeks again as well. PCE came in great, and that's the good news. It's compressing. We got CPI around the corner. I expect that to come down as well, and obviously Fed, and I don't expect them to hike like I've been saying for the last couple of months as well.
Yeah, appreciate that that information, Adrian. Made a lot of good points there, especially on volatility. It's definitely something to keep an eye out for. On the subject of news,
All right, y'all.
typically is the one who's told you me, but if anyone feels
Got me some pasta.
and wants to dive in, ready to open, feel free to.
What's up? What's up? Everyone, smash that like button.
Is there any news on Square, by the way? Just like on the free market, crazy stuff.
Just pop in, Casey.
Yeah, go ahead, Casey.
Oh, what's up? Good morning, guys. So last night I was on Spaces with Wolf. I mentioned my reasoning for swinging my QQQ calls for Monday. I bought them at close when QQQ was just below 344.
Let's see what we get today, y'all.
I was looking for a $2-3 move. Top target was 347. I'm going to be exiting the position here at open. Should be around 80 to 100% gain.
All right, resilience positive out the door, kind of on the gap up situation here.
For the day with my trades.
Gap and go. Okay, that's pretty decent.
Oh, yeah.
Should I just start to try to
Here it is. All right, so
shut off the upper DD?
really big candle here at open, and I'm going to be exiting my position.
Nice and good on 80. So let's see if res greater than 0, we're here, right? Res greater than 0 at the open. So res greater than 0 DD right here. Restless and zero bottom. Yeah, really strong gap and go situation. Resilience indicators, gap fill indicator we have 75%, looking great. Bouncing off the opens, 41.91 upper target on SP futures. We're looking for right now, as long as things maintain their integrity. But that high of the day for sure, not rallying past that.
Hedge pressure on SPY is 415.
Yep, right at the top, 415 resistance for sure. I might short off a hedge pressure.
PDD 112, 113 bills.
Let me go ahead and rephrase that.
This is a roll up for me. I've been pounding the table on this all week.
Okay, so we're kind of stuck between the two, right? So here to there to there. Res and zero. Okay, I do want to take a short of this. I definitely want to play this, but small. 415 resistance. So when you have resilience positive, right? There's some push there. It's not that far away. Let me go ahead and play this.
The move options had priced in. Options were pricing in.
I'm a short on hedge.
Options were pricing at about 7.8%.
So right to there, and then here it's res greater than zero, res less than zero, depending on what you get. Is it falling apart yet? No, 36 is still staying strong. It's looking good. Volatility, no problems there as well. I don't play QQQ ever. QQQ is not any. It's S&P is easier to trade.
Don't want to open up marginally green. That typically gets faded. Generally, these things end with a big down day, and that gets bought or not with an up day.
I have a reason to touch QQQ for me.
I'm not saying we couldn't be green today, but this is probably not.
Resilience tells all tales, so I'm not going to jump in on the short just yet. I'm going to let it play first. Are we going to QQQ today? Everybody smash like button. This is spaz deck. It's so spastic. Like it jumps all over the place. S&P is so much easier to trade.
Yeah, I grabbed some puts at the open. I was just no way though. It's pretty wild. I'm short crowd right now. I think we got a decent.
BSU on Nasdaq. Let's take a look at the liquidity map here.
I was short JP Morgan.
I mean reversion S&P. Yeah, so there's writings on the wall. We got limited upside here. So we got a couple of things up here. DD band likely going to resist. Yeah, so I don't even think we break high of the day. I think we're getting it right here. So just to kind of draw on the screen what you see here, hedge pressures are right about there. I'll probably take the trade there. Well, I'm gonna let it play out. Oh, Res is destroying itself. Good. All right, let's go ahead and take some of this. Let it pop. Let's go. Let's go. Res is negative. Let's go.
Bouncing off major fizzle.
IWM just broke hedge pressure, but in the bull zone here. Looking for one.
Take a look at IWM really quick.
Looking to long if res turns around off 164 and IWM.
Why not trade to hedge pressure? Because resilience is now losing its steam.
Oh, look at that. I just popped another $2. I missed it.
IWM liquidation about hedge pressure break to the downside. Nasdaq DD band break to the upside. Interesting to see a little bit of divergence there.
Yeah, IWM's been carrying the market a little bit lately, so that's why I'm considering a low risk, or not low risk, low size long if we kiss the bottom of the bull zone here.
Yeah, that
that
164, Adam? You talking about? Yeah.
That's what I'm looking for.
Pick up candle on Mara here.
Shorts going up about $200-300 already, making some money on this one. It's just like the gap's likely to fill, so I'm looking for 1250 on SPY. Let's see if we get it.
Oh, is it down?
Oh yeah.
Of course it is.
No way. It's only down 1% so far, though.
I'm watching, he's not a regular trader, Liquidity's okay.
Oh, dude, I'm on a Twitter space this morning. Everybody here, smash that like button. You know how it goes. Let's get that ratio up, guys. You gotta push that like button on the stream. fill you in on the details after that. Huge fucking winning streak on this challenge, man. I don't think I've lost a day in like almost 2 weeks.
Light size,
You'll know how it goes.
Monday, 166 calls, 60 cents.
Hit that like button, you guys. Let's go, let's go. Get that, everybody like the stream. When that number gets up above 75, we'll show the screen again. Y'all know how it goes. Let you guys ready. 5, 4, 3, 2, 1. 500 bucks on the trade. So my short's up about 500 bucks, hanging on there. We're passing through half gap on SPY with resilience is right at 0, slightly below. So we might get a little bounce here, but I think that the market is looking to fill the gap. This S&P selling tails. And IWM still looks pretty gross on the downside breakup hedge pressure. Look at this, guys. There it goes. There's that money. There's that bull liquidation event. It's looking pretty gnarly. So I'll count challenge focus. Rip! Let's go. The map still looks like garbage.
Guys, I'll try to be the bull here.
Yeah, so I was about to say, interesting enough, like watching SPY go down, but I'm watching Hughes just kind of hold up.
Absolute garbage.
Apple and Amazon are just, they're still holding up.
QQs look better though.
Yeah.
God. The monthly map, just as a kind of a new readout this morning, the SPY, the bull liquidation event extends from November 6th to November the 20th. Oh my God, this is gonna get bad. Wow. Ashton, do you see that? It pushed out on SPY. 2 more weeks.
That's horrible.
Wow. All the way through expiration, yep.
Time for me to open up more credit spreads on the VIX.
Yikes, guys. November 20th. That's no
A
bueno.
little bit of a pop here, be careful, even though I took it up from selling, but it looks like Red is picking around, trying to push to the upside here.
Okay, guys. Mino likey. Bull liquidation event through November 20th. It was November 6th. Huh, time to tweet for the history. Uh-oh. Event. Rip market.
Microsoft, as well would say,
Michigan in 20. Yep.
right now it's got some strength this morning.
Don't forget to get the Michigan numbers in 20 minutes. Lately, that's been a mover of the market.
Hey Matt, I'm curious, when you see, that much range in between a bull and a bear zone, like on IWM,
With Target Circle, every Target run is a chance to earn. Use the Target
Sorry, I was on mute. Looks like SPY's running to fill its gap. I'm still in my short. I'm aiming for about like a 412.5. I'm trying to exit maybe close to 41.58, 57 on my SPY S&P futures. Right for the Michigan numbers. I like to be flat going into that. This will be about $1,000, $1,100 profit on my stream.
Nice trade.
Thanks, guys. All right. Did you guys short or long? Y'all do anything today? Let's go. What'd y'all do?
What's at Intel anymore? It's up 10%.
Gavin's gotta be happy. AMD is rallying with about 28, so not nearly as big as Intel.
Did you guys know AMD has a bigger market cap than Intel now? Kind of crazy, right?
You guys short, took a small short. I love you guys, man. Y'all are fucking warriors.
Amazon's pumping here, new high of day is going for pre-market high.
Let's get it. Let's get it. Let's break the 1K mark today.
Look at SPY, look at
That'd be another 10% on the small account. I'll take 1,000. I'll pocket it.
not to die with it.
Let's go. Let's go. Let's go. Let's die. Let's check out QQQs that are sitting here. So we're not getting the Amazon relief rally we thought we get. So Qs are breaking into a mean reversion zone. Simple. Amazon's still in to hold the fort. Res is still negative and gross. You know what I'm gonna do? Why don't I take some? Let's go ahead and put some profit in my pocket. Give me some wiggle room to short on a pop.
Microsoft too. Microsoft's trying to fill a little bit. Yeah.
Good job, Leonidas. Kill it, kill it, kill it. Never thought you'd get this far. Just pass the 1K on your account for 400. Dude, come on, man. Brother, man, you make Papa Bear proud. You guys feel like you're learning trading, at least hanging out here, learning trading, not learning how to, what the children of TikTok call trading, or your, you know, guru warriors on Twitter, where they just say long and short, let's ride it, let's go. You're learning how to play your positions correctly, how to cost basis management, how to do cost basis management, how to change your averages, how to trim positions based on your confidence, things like that, multiple entries and trades, like the real stuff, like the actual art of trading. Like, people think that day trading is about walking up to the market, picking a side, longing, picking a side, shorting, and then making money. Did you know the difference between me and probably you, if you're the person that's like you in general, the person that's like struggling as a trader? The difference between a winning and losing trader is not picking the right direction or being in the right trade. It's about trimming your position. Look at that. I closed out some of my profit right there and it bounced. I can jump right back in and make a little more money, right? It's understanding how markets move, getting in, getting out, changing your position as your confidence changes in the market. Like, those are the real skills of a trader. That's your saw, your hammer, your nails. As a carpenter, those are your tools. Cost basis management, risk management, position size changes, and choosing a direction helps get the right trade more often than not, if you can be better at that. But most people don't teach trading. I see so many people say, come learn trading or come learn this and that, and you go there and you don't learn a single thing. You don't learn anything. And I don't know if the general public is fooled by the idea that's what trading is. I've seen very few masters of trading teach cost basis management, position size management, things like that. These are master skills that you have to learn to make money in this business. First ever live trade, 20%. Tyler, killing it. Nice, nice, nice. Short 2 markers, half gap, calling it a day. Jonathan, nice, good job, good job. You guys are awesome. Raz is still pretty gross. I think right here, again, I really want to play hard right there. Because those Michigan numbers might give me a pop. So like I said, I took a little bit of profit. Hang out there. You passed your trade day 150K eval. Thanks. Your channel and Rockets in general has really helped. Dodge. Awesome. 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 Well, I want to see traders out there funded, making money, killing it. You know, Get your brain situated on the things that matter. How to grow an account. I've done these small account challenges so long to demonstrate how you can take nothing and turn it into something. Can you go borrow $500 from your mom and work it up to 100K over a couple years if you want to take it slow and trade the right way? We want to make sure that we teach people how to trade and grow an account. That's the secret to trading correctly. Not picking a direction, not having a super secret set of tools. I watch people who have followings and sell trading businesses, and they don't teach a single thing in regards to trading. Their thing is indicator says buy, I buy, let's hold. Oh, made some money, let's close. That to me is laughably amateur and is so much of what's out there. Hey guys, we bought this thing, let's jump in. How much did you buy? Why did you buy that much? Why didn't you buy more? Where's your stop? Are you stopping 2 places? Are you adding to the loss? How are you playing this one? Right? I'll tell you every single part of my trade the minute the market opens. Okay, ready? I shorted here. I covered some there. I'm also going to additionally short right there. I'm going to have a stop right there if I'm wrong, about 1 point up. 416 is my final exit. So I got in a pretty heavy position of 15. I'd get in probably 30 if we tap there. My ultimate goal is to close everything on the gap fill here. So I played medium, so I have leverage to get back in and go there. So I'd have maybe 15 there. I may have maybe 30 there. I closed out 1/3 of this to continue to have the majority of the position for the momentum to the downside. I'm going to close out right about 55. Got 12 minutes till Michigan numbers. I'm going to kind of be mostly out of the way in front of a catalyst, which is pretty normal. Resilience is negative, which means we are fluxing through the box on res like this. UVXY supporting it open, which means volatility is going to pick up. We can get some wider Vs on this move, and then that's it. So I have everything from both my positions I'm going to get in, where I'm going to stop out on the whole thing, how I'm going to trim on the way down, and how I'm going to get out of the entire position in a certain spot. I know all my levels, all my places. I never am not 10 fucking steps ahead of my trade. That is what you do to make money. You are like a chess player that sees what you want to do the entirety of that. And as I'm talking, there's that volatility picking up. If you rewind the stream about 10 minutes ago or 10 seconds ago when I said I'm looking for that volatility to pick up, I'm gonna close around the gap fill for Michigan, right? It's trading. Trading is all about planning your moves. It's not about being right. It's not about your indicators being right. It's not about anything. It's about knowing how you're gonna play each move you get. If you're wrong, where are you fully wrong? Where are you partially wrong? Where's the trade still active and you can add to it to make a better cost basis, whatever, right? That is trading. My trade's up over $1,000 bucks. I'm gonna close at the gap fill, or about to tap it. I'm gonna be on the sidelines going to Michigan numbers. I'd like to short a pop if we get a lucky one off hedge pressure. It'd be nice. Close on the gap fill. Let's be patient for this. I mean, we're getting pretty close. Bootcamp helped. Oh, that's good to hear that, guys. I'm so happy. And you have to understand that, like, when you play those trader funding programs, it's like as your account grows, there's like this thing lurking in the shadows, like you're walking through the woods in the dark and like, you know, like fucking Red Riding Hood, and it's like 3 trees behind you. There's a weirdo in a cloak like staring at you, and every time you walk ahead a tree, they walk closer to you. That is your drawdown limit in those trader funding programs. They're designed to squeeze you out quick. So if you're not doing position management, you ultimately fail. Even if you get funded, you will fail those accounts. So I did a trader funding program just to prove that I could pass the evals, as people were talking about doing it. I just did it just to show how hard it was. Do a video series on how I did it. I did 3 of them. The first 3 I ever did. You know what? We're getting dangerously close to Michigan. I'm gonna flatten out. That's about $1,100 profit today. I just went ahead and closed out. We're close enough to the gap fill, so made about 1,100 bucks on my short, and gonna wait till Michigan numbers. I'd like the short on hedge pressure if we tap 415 on good news. We'll see. That's fine. So here's what I'll tell you, right? I did 150 static, K static, and I did a 250K end-of-day drawdown from ETF. Passed them both the first time. Got funded, and I did a second 150K just because someone says, how you know it's not a fluke, and I'm like, fuck it, I'll do it again. I passed that one in 5 days. So I had $550,000 in funded accounts. Called them up and I said, hey, can you just cancel those two? I'm not going to use them. And they go, wait, you're not going to use your funded account? Like you are? And I'm like, no, I don't need it. They were like, that's odd. Nobody's ever called us and said, cancel the funded account. Like, okay, that's cool. Yeah, I was like, just don't charge me the $75 a month or whatever the hell it costs. I'm not going to use it. So I earned them and threw them away. I earned them just to show I can beat it. That's all and so I was like, I'll trade the 150K on stream and just play with it. Turn it to the funded account, traded it for a little bit, and then just abandoned it when we got futures here and started trading futures here. But the trick to these things is not about playing the right trade every day. It's about managing your position. You have to know how to position size correctly such that the drawdown doesn't bite you on one single trade. So I made a video that teaches a matrix on your position sizing, how much you're supposed to do. Matched on the stats that they give you, that you're supposed to like maintain a certain whatever. All right, so that's good. Like I said, I was just trading to the gap fill. I want to be all the way from the mission gummers. You know, I feel like I always want to be all the way on the catalyst. We're going to watch the flux for resilience. We're going to keep an eye out for res. Remember, res greater than 0, less than 0 here. Res greater than 0 will take us up there. So we're going to watch the condition of resilience very quickly. Monthly maps play a big role in your trades. Rowan, 100%. Monday morning, Ash and I are the first people on Twitter screaming about the greater bear market. The looming possible crash. And I hate throwing that word around. The liquidation event is real, and it just got extended for 2 more weeks. That's really bad. Really bad. So bulls are selling really hard. See this? Market opens, just sells. This is bull liquidation. Monthly maps literally is a fucking crystal ball in the market. If you guys haven't checked out the spooktacular event we're doing, let me explain something to you. You can have our platform and all your data feeds for $20 for 1 month just to try it. If you have not been if you've never been a member before, this does not apply to you if you're already a member. Non-members only. First time look at Rocket Scooter. We do monitor that, so just FYI. My little $20 to check it out for a month if you've never been here before, just to go, and then it goes to full price after that. So if you guys want to check it out, you can play with all the data feeds. You can have all the tools, monthly maps at your disposal as well. To me, it's a crystal ball. Monthly maps is going to show me what positions are. You can't predict the stock market. You can't predict market direction. Nobody can predict anything, but you can reveal. We're not even predicting anything. We're showing you what is. It's not even a prediction. It is the truth. Positions do not lie. They are positions. So we're showing you a monthly map is showing you where positions are and where they change. That's the whole point of it. Loves education, Matt. Does 500 repop from combine going to funded chase. Good job, good job. Boot camp helped. The one you learn at each one of those spots. Loves education, Matt. Thinking of search for years the wrong place. Appreciate you, Kevin. We're getting 100K static on EPEX, almost halfway there. Learned more here than anywhere. Love you guys. Y'all are awesome. Beavis making 632, taking some money. Can go spend it this weekend. Good job. Honestly, the best trading education out there. Barb's just saying that because she knows I got cats. She's lying. Being taught to use price-based indicators always seem like circular reasoning to you. It is circular reasoning. I love how you say that because it is exactly the same thing. The indicators are built off price, so how can they predict price? It's just like a religious, now again, I'm not going to pick a religion and pick on anyone. It's like a religious document that says, I am right because I say this is true because I say it's true. Self-validating, right? Has no external validation source. Indicators are saying the indicators is pointing down because price is moving down, and it's circular reason. One is creating, it's self-creating, right? It's self-reinforcing, circular logic. If indicators are independent of price, then they would be a great thing to predict market. The indicators aren't terrible; they're great. At showing you a better way to construct price in an easier to read fashion. An indicator should take price and give you some easier way to read the price. And so an indicator to me is a translation. It's not a prediction. So I see an indicator as a translation. It takes price action and either smooths it out or gives you some history or some extended history of what you're looking at. It takes this and enhances it. It does not take this and predict it, ever. Because price is price. You can just look at price, and price should be able to predict itself. If indicators should predict price, then price should be able to predict price on its own merit. Every candle should tell you something about the next direction of the next candle. But the stock market's random. And we built our framework off of that premise. The stock market is random. You can't predict price action. So as indicators, the best it can be is a translation instead of a self-reinforcing. It's essentially, in the technical analysis, become a religion. It's a religion says, price says indicators are true because indicators can predict the market because price can predict the market. It's true because we say it's true. You gotta be like, well, I need something with the second data set to put to the side of this independent, right? As we found over the years, predicting the stock market's just a fruitless effort. So let's start with a premise that you can't do that. Will there be a Thanksgiving sale on the lifetime membership? There absolutely will be a Black Friday sale on lifetime membership. We always do that every year. Are you using Jex Profile for the maps? We don't use any. Okay, so imagine this, right? GEX is a distribution of open interest weighted by gamma. It's a very rudimentary gamma influenced heat map. So if you think of like a heat map as being just the open interest, multiplied by some Greeks or whatever, it's very basic understanding of the market. This is built off of this framework, Prashant. We look at orders that come in on the underlying. We look for people that are buying the underlying against what we call a dealer trade, who would, like an example is SPY. This is, I'm gonna give you a very crude analysis of what we do. And I might have to, let me get ready to trade again. We get a little pop here. So maybe about like what, $1,100 today, kind of closed out halfway and took the rest of it there. What we do here is we look for paired trades between a trader. An example is a trader will long the market, and we try to isolate dealers from the open interest. The major takeaway is that JEX and other things out there that look at options and make heat maps like spot gamma, they'll use the entirety of open interest as it's useful. We know that that is incorrect as far as making actionable analysis. What they're doing with the heat map is not terrible. It's just a heat map. Is it actionable? Well, one may argue, JEX looks like this, and all those other services look like that as well. They're just noisy distributions, and does it give you anything actionable? It's hard to say. We've isolated from the options a system that is actionable. Ways to look into it. So the open interest, we don't use all the options. We cherry pick from it what we believe belong to market makers. So a lot of speculative options we throw out. We're looking for a trader that's longed against a dealer who's bought calls, and we can isolate these neutralized trades by finding them in both environments at the same time. And then from there, we take the market maker dealer of the options who sold those calls. We catalog all of them. And so what we're looking for, these bull and bear zones, this is the call distribution of dealers versus the put distribution of dealers who are trading against traders on the house. If the dealers have calls, then there's a bull on the other side of the trade, bull against dealer. If the dealers have puts, then there's a bear of the underlying. So a bull of this itself against the dealers who are short that thing with calls. This is the bear of this thing against dealers who are long with puts, the neutralized trades. So a bull zone is dealer calls, a bear zone is dealer puts, and there's a line in the sand to make it actionable. Where's that distribution shift from one side to the other? Does that make any sense? So maps are built off of that framework of where is the line in the sand drawn. And Robert, to answer your question earlier, why is there flip-flopping here? We're in a transitional period of the market where there's a lot of shifting in positions. Sometimes you'll see bulls and bears flip-flop as people scatter positions. A lot of these are calendar and credit spreads that leak in as part of like hedging during a transitional move. Michigan numbers are now, baby. Check them out. Slight beat, current conditions up. Consumer expectations down, consumer sentiment up. Kind of a wash there. So what we look at here is bull and bear zone are where traders on the underlying, SPY clearly is in a bear zone right now, where the majority of traders are short against the dealers here in an illiquid environment. They're short against the house. Here, people are long against the house. In the middle, traders are long and short against each other in the majority. So that creates bull and bear zone, which are actionable pressures. Bear zone is just bearish pressure. Bull zone is bullish pressure, where bulls and bears are in general, illiquid. Hedge pressure is the gamma maximum of that sold side, that short side of options, from the options writers or the dealers to the market makers of the stock. So the middle, in that example, we had a trader trading against the house and SPY shares. Say the trader long, the dealer short, went out there and bought calls in SPY. They bought the calls from an insurance salesman. The SPY options dealer sold the insurance. So market maker of SPY bought calls, market maker of SPY options sold calls. So dealer to dealer trade between options and the equity itself is where hedge pressure is. This is the gamma maximum of all options sold to market makers by other market makers, again from the same OI plucking that we do. So hedge pressure is the maximum predictable order flow in the equities market based on options. Anytime you touch hedge pressure, it is a guaranteed volume spike to prove that we got it right. We know exactly where the forced hand maximum gamma is, forced hand selling and buying. It's a forced hand order flow of shifting positions. Remember, gamma is maximum delta. Delta is the maximum change in purchasing shares to delta hedge against changes in price in the underlying. So when delta is maximized, or delta growth is maximized, sorry, which is where gamma is the highest. So this is the highest change in delta, which is the highest order flow per tick change in the underlying. So therefore, any hedge pressure cross is a guaranteed high volume pivot, and we nailed that too. So let's scan for some, right? That's where our technology is different than like JEX and these other things. They don't go anywhere close. It's like they just graduated kindergarten and we're getting our PhD. It's absolutely different by magnitudes. So what we did was we took the framework of going through options data way to the next level. The filtration of open interest that we do requires an army of computers parsing up Opera's raw data of every single options trade that takes place in real time. It is countless data points. Okay, so let me show you hedge breaks, right? Let me show you guys what hedge pressure looks like when you break it. I'm just gonna pick some random stocks out of a hat. Let's just go into it. Let me see if I can find some hedge breaks. Still gonna get that nice little pop here. Even though it's a little wiry here, anytime you get close to it, volume spikes. Let me find something that has like a, let's look at Uber as well. There's a volume spike. Anytime you tap hedge pressure, it's a volume spike. That's the dealer hedging mechanic. It's forced hand. So anytime against the traditional volume, remember volume starts and decays and then picks up at the end of the day. But anytime you're interacting with hedge pressure, you start to see a little bit of volume growth right here. Now that one's very minor because it opened near it, but you can see that you get volume spikes. This is delta hedging. You were actually to reveal market maker delta hedging. And for 20 bucks, you guys can play with this yourself if it's your first time to check out our program. You can have all this information. It's normally 200 bucks a month, but you can play with it, see if you like it. We're also running a special 3 months at 35 if you want to do the full extended trial and come through and see the whole program that we have. So pick some more, Goldman Sachs, see what Goldman looks like. What's up? Hey, what's up, Cheyenne? How you doing? Again. It's hard to see because some of the candles. And actually, by the way, we're about to upgrade our data packages before the end of the year so that we're going to have an optional, you can buy 100% of the trading volume instead of getting your free data that we give you. Or is it your free data? Your I guess trimmed data. It's definitely not free. But again, we're going to have an extended data package that you guys can upgrade to, by the way. It's going to have 100% of the SIP volume, and that's coming out pretty soon as we evolve. So that's going to be great. You guys are going to love having deeper candles. I guess people have been asking about that. So gonna show the. I'm trying to find ones that are not just breaking at the open, so that you can actually see the volume separated. What are the Michigan numbers? Hold on, let's get through this real quick. Yeah, I'm trying to find I want to see if we can have any heavy hitters today. Maybe Citibank will have some more. I want to see one that just crashes through it. There it is. I want to give you a good example of seeing it. Anytime you get close to hedge pressure, right here, do you see how the volume starts to amplify and come down? This is dealer hedging at its maximum. This is all the options dealers buying and selling the underlying to adjust delta hedging in real time, and this is where your gamma is maximized. We've isolated the gamma maximum, which is maximum order flow of market makers. Literally, we've cracked a $1 billion idea here, right? And we're giving it to you guys in retail. Predicting volume, where it will be. Predicting unusual activity, where it will be. It's not really unusual, it's force hand. But that wind lets you see where volume can be. So all of our tools take that same premise of we're trying to predict where volume will be. So just letting you guys know that going forward, that's what hedge pressure is, to answer your question. What are Michigan numbers? Right here. What are Michigan numbers, or what are the Michigan numbers? It's a couple of them. Let's go through each one of them. You have inflation expectations. Oh, my tab just crashed. Well, let's go here. I'm sorry. Make some measures. Okay, so you have inflation expectation number. You have consumer expectations. And they kind of explain what they are. The current conditions component X is based on the answer to 2 standard questions. The expectation component is based on 3 standard questions. It's a survey, and these numbers help people. This is just a University of Michigan puts together this data and releases a report. Lately, they've been useful because it's just another catalyst. People are looking for every reason to spark some volatility. Consumer sentiment. And again, these are your traditional numbers that you're going to get with CPI or not CPI, PPI, and all these other ones that release similar data. You have CPI, PPI, all these expectations, PMI, all those type of aggregate reports of people's opinions. Just another group that puts together something. And so consumer sentiment, this is about hold on, they're talking on Spaces. I'm talking on Spaces, you guys. Hang tight.
I don't know if
Rashawn, do we consider dark pool and block trades? We don't yet, but we've explored adding that to our data feeds and building some more tools around dark pools. Because in reality, you know, as we can identify where that forced hand buying and selling will be. Hold on, I'm gonna talk on Spaces real quick. He's still talking. So the idea would be to build additional tools with additional data. Like, what can we utilize from dark pools? What happens if you get here? You know, can we build anything else off of these prints here? Are there dark pools in futures? I don't think so. I don't know the answer to that, but I don't think so. I think a dark pool is specifically an equities vehicle, but somebody here might know more information than I would. Prashant had said equity, future components, ETFs, and stock. My understanding that it was an equities only thing, but that it goes beyond my pay grade. All the dark pool stuff are like SEC regulated things. I guess Prashant says it's equity only. Oh, thank you. All right, resilience is negative. We're back at the top of the box. We take a smaller short here. Go back to my watch list. Here, I'll talk. I'm about to speak on the space. That's why I'm being quiet right now. Just gonna wait for my moment to shine. I'll throw some micros at this. I'm shorting in the box. I'm gonna build here, here, and here for a second short, whatever. Shorting, 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 stopping. I'm gonna do 3 at a time. Actually, we'll do. Itai, what are the commission structures that you're looking at? I'll look at that with you. Can you do me a favor and drop a link, Itai, and I'll look at it on the stream, like their commission structure. I'm super multitasking right now.
space.
Another trade across the gap.
I'll forward it along to you guys if you guys
Oh,
want it. If you guys,
absolutely, man. Please do. I love reading.
Anybody listening, if you just tweet at me, I'll figure out. If you can DM me.
Okay, so what you're saying, FX, commodity bonds, futures, black box for me because off the grid transactions, the options data is really, option data is easily available either. Hence, equity ecosystem are reliable. Just your opinion.
What I'll do is send it along.
Yeah, I mean, to like.
And if you guys want to post it somewhere for
Yeah. Can you connect your interactive broker feed for data trading the summer? You can't connect interactive brokers in your interactive brokers feed through this. We give you equities and options data as part of your subscription. So we give you your data package here as part of that. If you want futures data, right now we have our first broker connection to Edge Clear. You could connect to Edge Clear, and after you select an FCM, the FCM will deliver you futures data. There's like a $10 a month API fee and $1 a month for top book. Other than that, your equities and options data currently are free from us. So you can't connect to all kinds of brokers yet. But as the years go by, we're going to create more brokerage connections. Sorry, I'm in the middle. Dude, I've done a podcast this morning. I was on a show. Now I'm on a space. Now I'm with you lovely folks. Sorry, I'm coughing. Guys, again, scalp from here to here. I'm making a pretty decent spread today.
I was just gonna say,
We're not offering advice. What you're hearing is for educators' purposes
Itai, what I mean is, can you post a link here so I can click it? So I don't have to go dig it up?
based on the analysis. Presented here for what then you do so.
I'll analyze it on stream. Just drop the link that it sends you to. I don't know it off the top of my head. That's why, and I can't bring it up.
yeah, and Apple and Microsoft still kissing around the high day, so tech could get a nice rally here. IWM is really trying to hold that 162.50, 163 area. So, I don't know, still feeling bullish. I'm gonna keep saying it.
Yeah, like the volatility is just kind of sitting flat and not really growing. It's an interesting day. I say I'd close out my short scalp a second ago, and I think I'm happy making the money I did today, and I might just sit back and watch. But dude, those monthly maps, I'll tell you something cool. And Mark, when we say monthly map here, we have this thing that takes, our technology is like looking where options are distributed, and when they expire is a big important part of this analysis. So when we pluck out what we believe is just options belonging to like neutralized dealer trades, we actually daisy chain them together on their expirations in the tool called monthly map, so it can project them to forward. If you get my feed on the Mad account, or I think I retweeted it in Rock Scooter. you'll see that like it can project where bulls and bears are changing over time, or as options roll off when they expire outside the the grid of our threshold of our model. And so like on Monday we woke up and all it did was spell out volatility and bull liquidation, and all we've been doing is seeing these straight days or just red day, red day, red day. So like that particular technology is really good at seeing bigger sentiment changes as position size or positions change. So we can see like people's tolerance for being bullish right now. Bulls can't run faster from this party than they ever have before. And like Monday, we saw a very strong shift in the support side of the market on the long side. The asset managers are actually liquidating, and it matches what you see in the commitment traders as well. So what we can do is we can.
Hey guys,
Yeah.
I'm actually,
Go ahead, Stacey.
what Matt just said, I'm kind of happy with the money that I made today, so I'm just going to be sitting back. I'm not going to take any more trades. I've had a really good week. I didn't miss a single trade that I've taken this week. I went 13 for 13, so
Yeah.
get some stuff done around work today, and I'm just gonna call it. So I just wanted to say I appreciate you guys having me up here, and I hope you have a great and safe weekend, and we'll kill the market again next week starting Monday. So appreciate you guys.
Dude, thanks for coming always, Casey. We love having you here, bro. Good job.
Yeah, man. Good luck today. Mark, your DMs are closed, so if you want to shoot me a DM, we can talk.
Yeah, absolutely. Just here, 1 second. Let me just follow you and then.
So like just to wrap up what I was saying,
Do I need to follow or who?
Yeah, Adam, me. The guy with the
I'm just gonna follow all you guys.
Oh, and everyone else, follow everyone else up here.
How about that? So, exclusive trading, you're getting a follow. Shout out to our buddy Gunjan Bajari listening in from our.
sorry guys, I'm like multiple places at once. Give me a second, you guys. I'm like all over the place.
She's the best.
Yeah, pretty good here. Only 700 people on morning. So.
Yeah.
I always forget these spaces have these sound effects. We should use those more often.
Wait, how do you do it? How do you do it? Teach me. I want to be annoying too.
The little wand at the bottom, like that.
Oh my God! What was your brain? No, never again, please.
Never again.
That was a cool feature.
No, I'm fired. I fire myself. Don't ever ask me to do anything again.
When people like first figured that out, it was.
Oh
It
no.
was pandemonium.
I remember we were on a space one time and Grant Cardone was on it, and somebody he was just on a tear. He was talking for like 8 straight minutes, and somebody interrupted him with something comparable to that, with like an alarm, and I'm pretty
Alright.
sure he's hearing that alarm in his nightmares because he was so confused. It was the funniest thing ever.
Heads up here in IWM, second highest volume.
All right.
Just looking at the 1 minute candle here on basically a minute ago. Big volume pop there. Something that's on your radar.
You know, I want to say
What we got here?
all the listeners on here today.
Love having you here. We'll love having you here, Cheyenne.
All the speakers.
I'd convince you to sign up for Rocket Scooter because I know you said you weren't a member yet.
There's a little chat on the side where you guys can go in and put comments.
There's no link on top of the page. Oh, okay. Take a screenshot and send it to me in Discord.
I encourage you
Because
guys
I haven't
comments is
I haven't looked at it, and that's what I'm saying. I have no way to look at it because I already signed up. So I kind of want to see what it shows.
out to us. And
I'd have to reach out to them and get that link. Can I draw it on the monthly map? What can I draw on the monthly map?
What's up, Gav?
I gotta jump here. I got a hard.
Wait, everybody, do me a favor. Make sure you subscribe to the stream. Do that really quick, because I'm about to get out of here. Also, check us out. Check out our program, $19.99 for 1 month. If you've never done it before, it's just the first month. Take a look. Non-members only. This is a 1 month trial for 20 bucks. We also have a 3 month trial for 35 each month if you want to try that as well. Full unlock package is $199 a month normally, so you can at least check it out, learn what we do, see if you like the data, and kind of play with it, and go through the boot camp and learn all the stuff we teach. We'd love to have y'all check it out. At least check it out today. All right, I'm back.
Just a little extra.
Sorry, I'm speaking on spaces
I think a lot of people are worried
and eating my pasta.
use this new tool. It's going to change how I trade and all this other stuff. And what's really cool about Rocket Scooter, it doesn't change how you trade. You can trade exactly the same and use everything you already use. It just offers more confluence to your style of trading, which is fantastic. Talk to futures traders, option sellers, option buyers, day traders, swing traders, investors, and there's a little bit of something for everyone. So if you want to check that out, link is at the top of the space. $20 first month, or if you want that extended trial, $35 for your first 3 months each month.
Nice job, guys.
Check out the platform. So, with that being said, we'll wrap up the space at 10:30 on a Friday. So, lots of great.
There's no growth and volatility here. Wix is kind of staying flat. We're trading through the gap. What could possibly break down and trade down?
To the remaining speakers who haven't fleed yet, but give them a little follow.
I'm happy with the trade I made, so I'm not going to overdo it.
With us on this Friday.
Okay. Oh, you sent me a script? All right, bud. Let me check it real quick.
At 9 a.m. and Friday at 9 a.m. as well. So this is a pretty constant thing.
Yeah, but you didn't show the commissions.
So interest to you, make sure you drop
You said, let's talk about the commissions, right? Okay, that's what you sent me.
so you get notified of when we have these spaces. All right, guys, have a great day. I'll leave the space open just for a few seconds so you can drop those calls
Yeah.
if you want to.
Make sure, yeah. All right. Okay, so you had said there are a few possibilities of commission, which you recommend. So I don't see anything on the commissions. If you're talking about the 3 different FCMs, I trade with Philip. They're all great. There's you will recognize no difference in quality by choosing one or the other. I don't know what the commission structures between the 2 of them are. I choose Philip. They have more options. Philip also has, you can trade if you're from Canada. Philip also allows you to do a couple more depositing options than just a wire. I think there's like an ACH option. Like, don't quote me on that, but they're relatively identical. Philip's just a little more modern as far as like the administrative side of things. You have a few more options available to you. But Iron Beam and Dormant, also great. It's up to you. It's personal choice. When selecting an FCM, you have like 3 really great ones. It's really just the fine details that matter specifically to you. Like if you're Canadian, clearly Philip seems to have options for Canadians, right? You have to just read the little fine print there. But as far as like in a general sense, like a US trader in US hours looking for an FCM, you can throw a dart and pick one of those at random and have a similar experience. 95% similarity to all the other ones. So what matters is the administrative stuff, and if commissions are different. I don't know what the commissions are for this. Let's look it up. Let's see. So I don't know like the ABC comparison between all of them. Sorry, I can't help you further. What I would say is write them like Max at Edge Clear. Send them an email and say you're from Rockets here and you're curious about like commissions and stuff. He's really quick at responding. Max. All right, guys, I'm out of here. Check out the extended trial, everybody, or check out Spectacular. It's even better. $20 for a month if you've never done it before. Not for existing members. This is just like a trial version. You can jump in, check it out. Your first time, then it goes to full price after that, of course. We'd love for you to be part of the team. Kind of come watch the videos and learn what it is we teach here. Positional Risk is the future of trading. Literally, it looks at positions. Positions show you what people are doing in the future. It's the easiest way to understand the market, I think. So feel free to check this out. A lot of cool videos, daily Zoom calls, massive boot camp that teaches you all sides of trading. Everybody here, as you see, are in massive stream, tons of people talking about passing combines and trader funding programs. Saying, man, my game really upped when I came to Rocket Scooter. Learning the art form of trading, not only giving you cool tools to trade with, is kind of what we're about. Anything from positional management to risk management, to position sizing, to cost basis management, the little tricks that you need to know how to navigate as a trader, not just throwing your money up or down, trying to pick a direction and hoping you win something. You know, managing your position is what separates the good traders from the bad. And we teach you all that here. So we love y'all. We'll see y'all on Monday. I'll have a good day. Zoom call later this afternoon at market close. We'll see y'all later.